Good evening. This is the post-market recap by AGI Era. Today is Tuesday, December 30th, 2025, and it is shortly after 4:30 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's session. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a battle between bulls and bears, with a slight edge to the bears in thin, holiday-thinned trading. The S&P 500 finished the day down 0.14%, settling at 68896.24. Technically, the index is now trading just below the key psychological level of 6,900, showing some hesitation from buyers at these elevated levels. The Nasdaq 100 also dipped, closing 0.25% lower at 255462.6. The Dow Jones Industrial Average finished down by 94.87 points. Crucially, trading volume today was lighter than average, which implies that this move lacks long-term conviction. This is typical for the final trading days of the year, as many institutional desks are closed for the holidays. The main takeaway is that we should not read too much into today's price action. It's more of a low-volume drift than a high-conviction sell-off. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, is trading at 12.5. Despite the sell-off, the VIX remains subdued, suggesting this is a controlled rotation rather than panic. We are seeing a clear divergence in sector performance. Money flowed noticeably into the defensive utilities sector, XLU, which was up 0.223%, while the technology sector, XLTA, lagged significantly, down 0.32%. This rotation indicates that Wall Street is positioning for a more cautious stance, favoring safety over growth as we head into the new year. The macro engine room. The primary driver of today's moves can be traced back to the bond market. The 10-year Treasury yield settled at 4.4%, up on the day. This move is significant because it puts pressure on growth stocks, which are sensitive to changes in the discount rate. It directly creates a headwind for the high-flying tech sector, which helps explain the weakness in the Nasdaq today. Meanwhile, the U.S. dollar index is up at 97.92, and crude oil is trading around $57.91, responding to an unexpected rise in EIA crude oil inventories, which signals weaker demand. The AI and tech monitor. Turning to the leaders of this market, artificial intelligence and big tech. NVIDIA finished the day down 0.36% at $187.54. Microsoft closed up 0.09%, while Apple was down 0.26%. Tesla was the big loser in the Mag 7, down 1.17% to $454. The weakness in this group is notable because it's happening in a low-volume environment. This suggests that the selling is not aggressive, but rather a lack of buyers willing to step in and push prices higher at these levels. The market seems to be in a holding pattern, waiting for a fresh catalyst in the new year. After hours and look ahead. Looking at the after hours tape right now, shares of Pico Sila are moving significantly, up 5.0% to 35 cents in the aftermarket session. As we pivot to tomorrow, the calendar brings us the pending home sales data. Investors should specifically watch the 10-year yield to see if it continues to climb, which could put further pressure on the tech sector. The market will also be looking ahead to the release of the Fed minutes later this week for clues on the future path of interest rates. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed. Always conduct your own due diligence.